Professor Code. This is the Forex Supermodel Racing Review and Forex briefing for Wednesday, what is it, the 15th of February 2023. Just grab this. Yesterday we had no racing, and so the account is static at plus 73 units in profit approximately, near the peak really. And again, racing today's, we thought we might get in. Dundalk was the all-weather, the 325. You got this favourite Dr. Grace, which seems pretty solid. We don't want to take that on. Hereford National Hunt, model 14.23, which is neutral to slow on good going today. There's not much going there either. Weatherby National Hunt, 411. That's our model surface profile, pace profile, and that's a neutral sort of figure, and the going's good there. But again, there's nothing that's nobody wants to give us any money there. And finally, Kempton on the all-weather, yet again, is pretty scrappy. So so we're going to have to just take a rain check on that and no bet it again. But I'm sure we'll get in soon and get it cracking. So that's that on the Forex front. Now, yesterday we had a good go at things. We had some US CPI data, consumer price index, which came in quite hot, and the core component of that came in hot and strong as well. And yesterday we had a go at I know that people watching, there's going to be a right mix of people there's going to be some very experienced, competent people, there's going to be some people in the middle, and there's going to be people starting out. So, but anyway, to cut long story short, if you look at a 10-minute chart for yesterday for the GBP USD, which is cable, just prior to this CPI data, 13:30, so just prior, about an hour before, they were ramping up the GBP USD, so they were front running the GBP into the data, and if you look at, if you look at a 10-minute chart, the advantage of a 10-minute chart is you can see pretty much the whole day. So that's the 10th, sort of very easily you can see the price movements, and it was sort of, up at a sort of a double top. A temporary double top, which people will be paying attention to, and we basically thought it was a good place to short it. So we shorted it numerous times at various scales around that top. And if you looked at the indicators, they were sort of the ADX, average directional indicator, was punching just over, sort of under 50, and then it went over 50 and stayed over 50. Now, we don't really use indicators, but we know a lot of people do. So that was sort of suggesting that people were going to be emboldened, but there's no way they were going to push that too far through this resistance just prior to this CPR. The fact we were banking on it really coming back maybe 30 or 40 points just prior to this data, and they didn't want to know. They held it pretty solid. In the end, after a lot of jiggery pokery, we lost about 14 pips on some fairly sizable positions. So it wasn't that bad, to be honest. And what it told us was the market was positioned very long and very belligerently long on cable, and so we then stuck in a sell bounce order on just prior to GBP USD, and of course we got a good spike down and made the pips back and a few as well. So but due to this positioning, you got this whipsaw effect, so you had to be in and out very quickly. And then the market went up, and then they started to sort of chop and go around. So that was what we were up to yesterday. We if you're going to operate that strategy, you want to box yourself in on a significant data point. Look where the market is. So in this case, GBP was running up against pretty strong resistance. The indicators that people were using were strong, but you'd have to be pretty brave to keep punching it higher as you run into this data because of the data risk. Anyway, now today you've got a similar situation. We've got retail sales in the US at 13:30. and we can operate a similar sort of boxing in process there. People aren't going to want to stick their neck out too far just prior to 13:30 today with the retail sales. The market's been talking up the dollar, so you're likely to see that people are expecting strong retail sales, but they may not be, and so you can get maybe a bounce trade in, or you can get a window trade against it. So if you're looking to sort of fade into that sort of data window. Now, the interesting one today is the AUD, the Australian dollar. It's getting the markets. You've got yen up apart from against the dollar, which is strong. You've got the pound, which is down except against the AUD, and the AUD, which is weak across the board. So the market's really selling the AUD off. Yet our modelling suggests that the AUD is going to turn around and going to be a very strong force. Now the GBP AUD is the obvious one, but that's a very strong volatile. It's got a volatility of 405, which is the top volatility of our FX pairs. If you want to know the individual volatilities of our modelling, we've got a video, how volatile is my FX pair. We go through them all. Anyway, and probably, so that's, what is it? That's GBP AUD, the most volatile pair in the business, really, from the majors. And the one that's probably less painful to trade is the AUD dollar USD, which is modelled at 155, which is below half mark, so you've got far more control over that. You won't get as much bang for your bucks, but your account isn't going to freak out so much if you are on the wrong side of it. So the AUD USD is maybe where the action is going to be. Now, if this market turns and goes risk on, and the dollar comes off in the usual transmissions, then the AUD USD is going to fly to the upside, and that's what we're going to be looking for. And likewise, the GBP AUD is likely to collapse. But so we'd avoid that unless you're particularly brave or you know more than we do. So that's where we are there. We're going to leave it there. Gold is running for the hills at the moment, so the market's positioning for a strong dollar, but it may not happen. And as soon as the dollar starts coming off, the AUD is going to start flying. So that's where we are. So I hope that was useful. Any new subscribers, welcome, and thank you very much. And for the rest of us, thanks for watching and goodbye.